What's going on, everyone? We're going to talk about no, you got to see the car go down the road. That's the whole point of this. That's the whole freaking point of this. Oh, you're shitting me. That is just terrible. There you go. Look at that shit. Anyways, what's going on, everyone? Market metrics. Let's talk about open interest and put call ratio. What is it? What can you do with it? And why does it matter? Let's go ahead and take a look. But before we begin, all this talk about beating Wall Street. Come on, people. How are you going to learn to beat Wall Street if you don't learn their game, if you don't study their tactics? And eventually, after learning and looking at it for so long, you're going to know what they're trying to do because they're only limited to so much. Sure, they do a lot of shit, but hey, it's all within legal bounds because the filings, they come out to basically allow them to implement new strategy. That's why I read them. That is why they're relevant. I know they don't enforce them because they're playing around what you know to be strategy as far as options. Now let's go ahead and take a look at PCR and open interest and volume and all that good shit. But basically, I mean, we're not going to be able to win, or even the idea of winning is not even going to be possible until people stop chasing hype and actually start learning what the hell's going on. Which that's what I'm here for. So let's get started. We got to learn their game. That's all I'm trying to say. So, open interest and put call ratio. What is it? What mean? ELI5. Don't worry, I'm going to try. Open it. Oh, god dang, the Discord. I always forget. So, open interest indicates the total number of option contracts that are currently out there. These are contracts that have been traded but not yet liquidated by an offsetting trade or an exercise or an assignment. Unlike options trading volume, open interest is not updated during the trading day. You only get a brief look before the open, and then you're hosed, which I think is BS, but hopefully that will be changing in the near future. Now, when it comes to volume, that refers to the number of contracts traded in a given period, or the number of contracts that trade hands in a given day or time frame that you select. Volume is updated during the trading day in real time. That's the biggest difference between the two. But there's also another big difference. And that's the difference of the put-call ratio. The number that you can determine by using a very simple formula that involves third-grade math to measure market sentiment. Let's try using a real example. Let's use Shitty Ally, which I have puts on for this Friday. Why, do you ask? Because I analyzed the OI, the volume, and the PCR, amongst some other things, and determined that it was the right play. Now, let's determine the volume PCR for Ally. Because keep in mind, a lot of people don't realize this, there's two forms of PCR, open interest and volume. So to do this, we take the amount of total puts, or total volume of puts, divided by the total volume of calls. That gives us our PCR, or put-call ratio, for volume. Which, when you do the math, it comes out to 0.15, or extremely bullish, for volume PCR. Now, think about this. If you have more volume for calls than puts, that's obviously bullish, because volume is volume. But now what about open interest? If we look at open interest, it tells a different story. We still have more calls than puts. We still have a PCR under 1, but we get the entirely different sentiment around it. Now, why could this be? This one's trending bearish for open interest, not bullish. Why? Well, look at the amount of open interest. This is a low liquidity stock, low retail interest for the most part. So what are they going to do? If open interest is market makers and volume is retail, which is how I like to see it, then what can that tell us? Well, that means that if more people or more retail or more volume is on calls, but more open interest is also on calls, wouldn't that mean the stock's going to go down because more calls have been sold than bought? I would think so. So basically the way I look at it here is you see this 2382 with the 45 strike and this 932. The calls outweigh the puts. That's bearish for open interest. If we were looking at volume, we go back one. volume is bullish on the 45 strike because we have 18 against 0. That's bullish for volume. But honestly, I don't even look at volume. It's irrelevant. I only pay attention to this. This is what's important. A lot of people think that more calls and open interest is bullish. Sorry to tell you, that's not the case. That's your resistance. So you can see here, we have call, walk down, call, call, call. When is the first point that the calls don't outweigh the puts? That is an amount that would be relevant. That's right. Not until 32. Well, if I'm right about this, I'll make a lot of money because, again, market sentiment tells you a lot. So the biggest thing to take away, PCR is measured in two different forms, volume and open interest. Volume, I don't even really pay attention to it. Open interest is where I'm more inclined to look for the PCR because it's more relevant. I'm going to explain this as best I can on the following slide. So in open interest PCR, when this is greater than 1, it's bullish, or more puts have been sold or shorted. When the PCR is greater than 1 for volume, it's bearish, or more puts have been bought than calls. An extremely high put-call ratio for open interest can be a bullish signal that indicates the market is unduly bearish and is due for a turnaround. The second logic behind this is that more puts means more long hedge, while more calls means more shorts hedge. That is why higher ratio suggests bullish bias, while lower ratio suggests negative bias, which is why the PCR of 0.87 was trending bearish for open interest. Now volume, again, PCR greater than 1 is bearish because more puts have been bought than calls. An extremely high put-call ratio for volume can signal that retail is buying puts, so the option sellers, or the open interest, are making their premium. That is basically all it is. More volume with no OI equals high premium, retail gets effed. A lot of open interest with no volume means retail missed the boat, and depending on the PCR, you could have a move. Now, let's put all this together and see what GameStop's PCR is for open interest for this coming week. That's right, it's 2.1182, or extremely mo effing bullish. Sorry, I'm just trying to jack your titties. It's been a while. Let's go, Brandon! Let's go, Brandon! Let's go, Brandon.